Hello, everyone, and welcome to our very first episode of the 2025 year of Making Sense of Investing with Court. I am here with our Chief Market Strategist at Good Life, Noah Brooks, and we have another exciting episode.
Absolutely. I cannot believe, though, first and foremost, I can't believe it's 2025,
I can't believe it either.
right?
Came real quick.
A quarter of the way through the century?
Yep,
That is nutty to me.
it is crazy.
I can't believe it. It is hard to fathom that we all made it this far
I know.
into the 2000s, 10s, and 20s.
I do feel like last year went very quickly. So,
Not a lot happened last year.
no, nothing. Nothing exciting happened last year.
Yeah, no, not at all.
But first, new year, new name.
New name.
New name. I am in the process of changing my last name to Gray. So I will be Courtney Gray in the coming months once I get through all of the fun of doing all the legal stuff. So don't be alarmed if you see the name on the statements. I did get married on January 18th, and I had the great honor of having this gentleman perform the most beautiful ceremony for Clay and I, and we had the best day of our lives.
It was truly one of the highlights of my life.
Oh, I
to
appreciate
do
that.
Yeah,
That's so
absolutely.
kind.
It was an honor
Yeah.
and privilege.
Thank you. It's definitely a day I will never forget.
Yeah.
So you did a phenomenal job. Noah is a talented man and can do a lot of things, and he can now add officiant to his resume of his bag of tricks. So
I don't know that I'll do any more. No one's asked me though, so
your
I'd have
your
to be-
stag bolo was pretty
Yeah.
incredible. Caught my eye.
did that
Soon
for
as-
you.
soon as I
did
walked
that
down
for
the
you- I
aisle.
did that for your dad.
You did that for my dad.
Yeah.
Love it.
Yeah.
Love it. No, we had a beautiful day, and like I said, Noah did such an amazing job, and it was an honor to have you there and to have Ailish in the wedding too, and lots of friends and family there. So it was a beautiful day. But here we are back and in full swing of things. Of course, January rolls around and tax season is upon us.
Yeah.
So we're getting into the thick of things. Don't be alarmed if you have not gotten any of your tax documents. You shouldn't have because they've not been released yet from LPL.
Well, the date is the 31st,
Yes.
right? That's the kind of that first click
Yes.
of the year. But the fact of the matter is that there's other documents that come out a little bit later.
Yeah.
Most people will get their 1099-R. So if they've taken a distribution from their retirement plan, whether it's an
Yep.
IRA or other, they'll get that by the 31st.
Okay.
But I don't. It's a little bit iffy on the other ones.
Yeah, typically the non-retirement accounts come in waves, so don't be alarmed if you get, retirement accounts and you don't get your non-retirement account tax documentations. They have not been released. Typically, LPL releases them in waves over the course of really February into early March. So again, you might get some things before others. It's okay. Probably hasn't gotten released from LPL yet, but once they are posted, you'll either receive them via mail, or you can access them as well on accountviewonline.com. If you need assistance getting set up on accountviewonline.com, Barbara Jean is able to help you. I do think many of you have switched to AccountView Online over the last couple of years, so you're able to access things much easier on there. But those will be coming in the coming week. So if you call me in the next week, I don't have them. So I cannot help you yet, but I will be able to help you as soon as they get released. And if you lose them, don't panic. We can get anything you need from LPL. So happy to work with you. Happy to work with your accountants as well, providing that you need us to get involved in anything, and we'll be there for you during the fun tax season.
Yeah. Before we get into more taxes,
Yeah.
I don't know if we're going to talk taxes or not, but before we get into that, I think we should just make a service announcement. It's the beginning of the year, and now is a perfect opportunity for everybody out there, if they're contributing to a 401k plan, to look at what they're able to put in.
Yep.
And they might be surprised that they're not even maxing out their employer benefit, right? The employer match. Most employers, not all, but most employers will give some type of match to the plan.
Yeah.
This year for 2025, the limit is 23,500, and for people that are 50 and above, it doesn't matter if your birthday is December 31st. If you turn 50 in the tax year 2025, there's a $7,000 catch up. So that means that you can actually contribute $30,500 to your 401k. I didn't do the math on that yet, but for the 23,500, it's about 1,950 a month. If you want to divide that into two, or however many pay periods you get to max it out. Now, some people have the ability to max it out, some people don't. But what I always like to advise people is just make sure that at the minimum, they're maxing out what their employer will contribute to them.
Yeah.
So if it requires you to put in 6 to get 4, it's free money.
And in addition to that, so it's not only the 401k limits that have increased, we also have the IRA contribution limits actually have remained the same since 2024. So you're still able to put in $7,000 into a Roth or a traditional IRA if you're under age 50. If you're over age 50, you can contribute up to $8,000. So if you weren't able to max out last year, there is still time to max out for 2024 before you file your taxes this coming April 15th. So you actually have up until April to max out for 2024. And then if you anticipate wanting to do that for 2025, just reach out to us and Barbara Jean will get you straightened out with making sure you're increasing your monthly contributions so that you're on track to max out for the 2025 calendar
If
year.
I did my math right, I think it's about $583 a month
Yes.
for 6,000 and roughly 665 or thereabouts for the 7,000.
Okay. Perfect. So reach out to us and we will be able to assist you. You meant 7,000 and 8,000.
Yeah,
Yes.
that's what I.
So 7,000 max out if you're under age 50, 8,000 max out if you are over age 50. You have that extra $1,000 catch-up provision.
Yeah.
So those are some general tips that we have. Noah and I also wanted to highlight making sure that you've updated beneficiaries. I think it's something that we tend to overlook. So if you had any life changes, if there was a change to who your beneficiary was, make sure you update that with your employer.
Well,
We see it often
you
that
got
people don't
married.
do that. Yes, I did.
Some people out there may have gotten divorced, right?
Correct.
And it's a perfect opportunity, or had kids or grandchildren.
Yep.
Perfect opportunity to update their beneficiaries.
Yes. And you can always add contingent beneficiaries as well with anything with us. So if you have your primary beneficiary has not changed, but you want to add a second tier if something should happen to that primary beneficiary, it's always good practice to add a contingent
Way to
beneficiary.
be dark on that one.
I mean, it's reality. We've seen last year was a crazy year. I've seen some stuff, where actually a beneficiary passed away and then the account owner passed away and never updated the beneficiary, and it just created a much deeper
So
situation.
what happens in that scenario?
We had to get the state attorney involved and work with the fund companies, and we were submitting double death certificates, and it made for a very long, drawn out, stressful process for the adult children who should have been, grieving the loss of their loved ones. So it's just not a fun time for
So
people.
recommended have updated beneficiaries.
Update your beneficiaries, please.
Yeah.
Yes, save yourself that trouble.
Yeah, absolutely.
All right. So now that's our highlight on tax season. I do want to get into earnings season, which
Yeah.
we are in the process of receiving earnings right now from various companies. I know financials, I believe, reported a little bit earlier, and now this next couple of weeks, there's a big batch of earnings coming. So Noah, do you mind catching people up on where earnings are at so far for what has come in for 2025? Fourth quarter of 2024, but received. in
Well, I'll tell you
2025.
what. Let's talk the Magnificent Seven, right?
Okay.
The Mag Seven that everybody knows, the Nvidias, the Metas, the Googles, the Amazons, the Microsofts, Apples of the world, and Tesla. Those are the seven, if I remember correctly. It's been the earnings of the Mag Seven have been driving the market higher. And there's been a lot of people saying, well, you can't only have these big seven companies driving the market higher and creating earnings. And so if we take a look at that, what we see is that in 2024, and this is simply because not all of those Mag 7 have reported yet, but the expected number for 2024 for the Mag 7 earnings was an increase in earnings of about 33%, which is really good.
It is very good.
But so you take a look at the S&P 500, approximately 500 companies in there. I think it's 499 right now because one bought another. But the remaining 493 companies in there for 2024, the expected growth rate was less than 4% on earnings.
Mm-hmm.
And so what we've seen this year is we've actually seen a little bit of a reversal, not complete reversal, but the Mag 7 earnings, the expectation for 2025 is that they're going to grow about 22%.
Okay.
Where the rest of the market, that 493 companies or 92, they're going to go roughly 13.1%. So it's a pretty big increase on the
Yes.
bottom 492 or 3. And I think it's really healthy.
So it's a broadening of where we're getting our growth from for the
Yeah.
start of this year.
Yeah. So the value companies and small and mid-sized companies may have done reasonable in 2022. And I say reasonable meaning everything was down in 2022, but maybe not as down as much as the NASDAQ, which was down 30%, right? That large growth sleeve of the market down almost 30%. But then we had this reversal where those 7 companies were really just driving earnings. And what we want to see, what we think is really healthy, is more companies growing their earnings. And it's not that we want to see the Mag 7 fail or we want to, get them out of our purview. We just want to see a rotation in the market where we have other companies actually moving forward in earnings and driving the market. We think that that's healthy.
Yeah.
So what we saw yesterday, I think that is worth it. So
Yeah.
I don't know if you want to tell the date, but yesterday was a big down day for NVIDIA, which is one of the Mag 7, and NVIDIA's had its monstrous rise over the last few years because of its exposure to artificial intelligence. So they design the chips that are really powering the artificial intelligence software. And I'm not going to say AI. I'm just going to say smarter software.
Yeah.
Right? I think that's the way to look at it.
I like that terminology.
It is smarter. I don't know if it's smarter than us.
Nobody's smarter than us.
Like,
Noah.
get out of here. Next year it'll be
Next
smarter
year.
than
I
us.
know. I know.
But so what came out over the weekend was this Chinese, I don't know if it's a startup, but they're saying it was only, it's less than 2 years old. A company.
Nobody knew about them. Let's leave it.
I had never once.
It wasn't a common name. It wasn't, somebody that was on anyone's radar, at least in terms of our world. So, for all intents and purposes, it kind of happened over the weekend and spilled into Monday.
So DeepSeek came out. Well, I don't know if they came out or if we just opened our eyes to it, but essentially they have an alternative to ChatGPT, which was brought out to the public in 2023. And supposedly, and this is where the rubber has yet to meet the road, there's a lot of anecdotal evidence out there, but I don't know that we've had any hard evidence. Supposedly, it's better, cheaper, faster, stronger, right? So they're saying that the company itself, DeepSeek, only put in $6 million to get this large language model up and running to where it is today. And if that's true, I'm not so sure. I think the jury is out on it yet. But if that's true, then other companies have spent a lot more money for less. And that was the problem of NVIDIA yesterday.
And you already had a stock that, for all intents and purposes, may have been overvalued. And so you
Priced to perfection.
Priced to perfection. Okay. But you had, this opportunity with NVIDIA where you just kind of thought we'd keep running and running and running, and then you have competitor come in, to your point, that's able to do it for a lot less money, and we saw one of the biggest one-day sell-offs in any position.
Yeah.
Very
from a market
from a
cap
market cap
standpoint,
standpoint.
biggest one-day sell-off in
almost,
one
what,
stock.
$700 billion, which is crazy.
Just a few billion.
Off of a $6 million, or off of a stock that claims to be able to do something for $6 million, they really were able to put a big wipe out in the stock valuation.
Yeah, and so here's where I said the jury's out yet. The rubber has yet to meet the road. If this is a giant if we can believe the Chinese data. And I kind of paused there and I let everybody absorb that, right? If we can believe the Chinese data that this company has only spent $6 million and is having these fabulous returns, maybe we do have to reevaluate the NVIDIAs of the world or the Oracles of the world and the whole artificial intelligence and smarter software dialogue. I don't think sitting here right now today that's the truth.
Yeah. We really don't have any answers. I think there was probably a big reaction to a stock that may have been valued higher than should have been, but it's the markets are efficient, as we always talk about. So earnings still have to come out for Nvidia, and there's a lot of news on the way still for that particular company.
I guess my thought is, we're not going to really understand this DeepSeek until we have access to it, and they're not going to give us
There's not going to be an
access
open
to
book
it.
for it. So
Yeah. I mean, it also, the timing is interesting. We have the new administration that was that just came in last week,
yeah, just
right?
installed.
And so the timing of it makes me think that it was done intentionally to just, like kind of a warning shot over the bow type of thing.
Yeah.
But then what's the follow-up to that from a software standpoint? So the jury's out.
At the end of the day, earnings drive it all. So we still need the stocks need to perform. And if Nvidia is able to get their earnings, in line and meet expectation or exceed expectation, I'm sure we'll see things stabilize back again. So,
Yeah, well, it's up today.
yeah, it's up, it's rebounding. So volatility in that space has been a thing really the last 6 to 8 months, but from a growth standpoint, its growth has been through the roof. Yeah. So more to come on that one.
But just to hang on to the smarter software dialogue for a minute or two, Court. I think what you have to do is put this whole thing in perspective, and you think about technological advances that we've seen. I was going to say in the last 5 years, but it doesn't matter if it's the last 2,000 years, and you're talking about the Archimedes screw, where you're bringing up water through a pipe, or if you're talking about the cotton gin in the late 1800s, or if you're talking about ChatGPT just last year. Technology is going to continue to advance, and what we are seeing is this smarter software really, really helping the other companies that maybe we don't talk about every day, the companies that you wouldn't actually think are technology companies, but they benefit from the technology. And that's why smarter software, artificial intelligence is really going to transform over the next few years, because companies like LPL that we utilize, there's not a lot of artificial intelligence going into our day-to-day business.
No.
But in 5 years from now, I
The
suspect,
landscape changes.
right? Dramatically.
And there's a lot of pieces of the supply chain too in the artificial intelligence space too. There's there's the users, there's producers, there's component parts. So there's a lot of ways to play that space in general. And so I think there's going to be continued growth from other companies that might not be directly in that space, but to your point, benefit from that space. And that's where we're hoping to see more of a broadening from other companies that are part of the S&P 500, have a little bit of growth happening in more sector rotation. So that's what we're keeping our eye on, and Noah's team's keeping their eye on from an overall investment portfolio construction, level.
Yeah. I don't want to beat a dead horse, but I'm gonna for a second. When you think about this smarter software and you think about what it's supposed to do, you look at the two ideas of efficiency and productivity. And efficiency really is what you're doing with the resources that you have. And productivity is kind of the net end result of how many widgets did you make with that being efficient. And the whole idea of efficiency is kind of automating repetitive tasks. Like if the business is doing something 500 times a year or 5 million times a year, how do you automate that? How do you get a piece of software to do that instead of a person? And we can have a whole dialogue about people being forced into other jobs. People aren't going to be replaced. There's going to be other jobs. We don't have any buggy whip manufacturers anymore, right? I mean, it's just we have other jobs. We evolve. And so when you think about really what's going to happen is all of the repetitive tasks that are being done by people like you and I are going to be done by software. And then you start to integrate voice recognition into that smarter software. And the landscape over the next 5 or 10 years is really going to be different.
Yeah.
A lot more productive, and our daily tasks are going to be a lot more efficient.
Yeah, there's already, companies that are out there that can record notes during meetings and produce email follow-ups and notes, and it takes a lot of that hand work that you have to do at the end of following up with meetings, which can sometimes take hours to if you have multiple people that you have to send different tasks and email recaps to. It's almost completely automated now. So evolution's exciting, but with that and with any type of space that has a lot of growth, so is there, the volatility follows as well. So I think overall, we are anticipating continued, if not really more volatility in 2025 than we had in 2024. I mean, we had a couple not so great months in
Yeah, we
2024.
we had a reasonably big drawdown of 8.7%.
We
So
did.
from the top to the bottom, the S&P 500 was down
What was
8.7%.
that? August?
That was August.
August, and
Yeah.
then December was not a great month. So if you got your statements a couple weeks ago, which were reflective of the end of the year statement, the December month was, we didn't really have the Santa Claus rally that we were, or we have had or experienced in prior years. But things turned for the positive, I think, first couple weeks of January. And now it's really just digesting what the policies of the new administration look like, what the interest rate environment looks like. That's, something we haven't discussed yet on this episode, but that's still sitting there. There was a lot of Fed rate cuts that were priced into the market that really didn't happen, and I think some of the market adjusting in December was to accommodate for some of those rate cuts that we were anticipating not actually happening. So, do you have anything you want to touch on that part of it, like the interest rate environment that we're in at all? Before we
I think the
conclude?
biggest thing out there is the housing market. As rates stabilize in that 6.5, the average 30-year, 6.5 to 7%, it's still relatively hard to find affordable housing, and that theme is going to stick with us for the entire year, for all of 2025. Inventory is relatively low, and it is definitely harder to go out, especially for younger people, maybe on their first or second job or out of college. It's harder for those people to go out and, a 3% mortgage versus a 6.5% mortgage. It's dramatically different. And so that's kind of what we're looking at in 2025. I mean, not just real estate, but that seems to be one of the things that is going to be I don't know necessarily a thorn of in our side, but it's something that
we're still dealing with it.
we're still dealing with it. Yeah. And it doesn't appear that interest rates are going to be going down. Now, the president has come out last week and he demanded that interest rates go down. That's not really how it works. So the Federal Reserve doesn't really have any control over longer term interest rates. They control the overnight lending rate between the Federal Reserve and banks. So for the president to demand that rates come down,
We still need the data to support that we're in a position for rates to come down.
But even there, like maybe short-term rates come down, like overnight lending rate, but the 10-year or the 20-year or the 30-year bonds, governments generally don't have any control over that.
Right.
And so if the bond market thinks that rates should be higher, rates will be high or stay high or go higher.
Yeah. And that's why we, as we're constructing the portfolios and we're doing our quarterly rebalances, continuing to make sure for those of you that own bond funds that we have a very well diversified portfolio within the bond sector. I mean, there's a lot of different ways to play the bond market, and Noah and his team do a phenomenal job making sure that there's exposure to the entire bond market, from short term to corporate to high yield and everything in between. So
no long term though.
No long term. But if there are, you see a lot of bond funds in the portfolio, it is intentional because we are trying to play all the different angles of what could come, and we believe in diversification. So
absolutely.
Awesome. Well, Noah, thank you for joining us. Just to recap everything, as we said, it is tax season, so 1099s are coming, not yet mailed. You will be able to access those on AccountView online. You may be getting retirement forms before you get the non-retirement account tax forms. Don't panic. They will be on the way. And if you lose anything, you know where to find us. Just give us a call. And if there's any other updating or household financial planning you want to do, if anyone is thinking about retiring and you want to rerun projections, I'm here for you to be able to do that. Really get a sense of your cash flow, even if it's not retiring this year, but maybe starting to think about in the next couple of years. It's really best to start that planning process now if it's been a couple years since we have looked at things. Sometimes people will come the month before they're ready to retire, and it might be a little bit of a shock as to what life might look like, and it's not what you had hoped for, or maybe you're ahead of the game, but don't like surprises, so we prefer people coming to us in advance of that time that they actually want to fully retire. And yeah, again, we think volatility will probably be a theme throughout the 2025 year. So don't be alarmed if you see a lot of ups and downs along the way. But overall, we're optimistic about the 2025 year.
Absolutely. Thanks so much for having me.
Thank you, and thanks to all of you. And I am so excited to see so many of you in the coming weeks and months as we get going with our annual reviews. So thanks for tuning in. Noah and I will be back next month to bring you more exciting news.
Bye, everybody.
Goodbye.